There are no fewer than 5 legitimate documents that the typical American homeowner past the age of 65 currently has available to them, each capable of halting, reducing, or permanently locking the property tax bill they hand over year after year. 5 documents. But before I say another word, I have to straighten something out, because this is the number one thing people get wrong about property tax exemptions, and it explains why the majority of seniors who legally meet the requirements never submit even one. Folks assume that a video like this only speaks to a single type of homeowner. Some figure it's strictly for struggling low-income retirees, so if they own a comfortable home that's fully paid off, they check out. Others figure it's only meant for the very rich who own sprawling estates, so if they mostly survive on Social Security, they check out. Neither group has it right. And the confusion doesn't end there. A few of you are thinking, my place is already paid off, so the property tax isn't really a burden. It is. It's the largest repeating expense you will ever face on a home you already possess. The county couldn't care less that the loan is paid. They mail the bill regardless. And a few of you are tenants right now and figure none of this matters to you. It does, because your landlord is footing that tax, and the landlord is handing it straight back to you in your monthly rent. When that bill shrinks, your rent quits rising the way it has been. So this rundown is meant for each and every one of you. Whether your house is valued at $90,000 in a tiny town or $400,000 in a county that reappraised it last year, there's genuine money on this list with your name attached. With a few of these documents, the payoff is largest for the lower-income retiree. With others, the payoff is largest for the homeowner sitting on a paid-off home that has tripled in value. On every single one, I'll point out exactly which group benefits the most, so nobody watching can claim, this doesn't apply to me, because the plain truth is that homeowners across every income bracket are quietly overpaying their property tax bill, simply in different fashions. The reason hardly anyone clues you in about these documents is painfully straightforward. Your county tax assessor's office runs on the very taxes the assessor brings in. Every dollar in exemptions they grant is a dollar their own office won't have to spend the following year. So the county won't ring you up to announce they'll freeze your taxes. The county won't put the senior exemption application in the mail on your 65th birthday. The mortgage lender won't flag it on your statement. The realtor who sold you the place won't mention it. And the typical property tax bill nationwide runs roughly $4,800 annually. For a 65-year-old who remains in their home another 20 years, that's almost $100,000 walking out the door on a bill that for plenty of you ought to be a sliver of what you're shelling out, or in certain cases, nothing at all. Over the next 20 minutes, I'll guide you through all 5 documents one by one in everyday language. After that, I'll throw in 3 bonus tactics at the close for the homeowner holding some genuine assets, because those final 3 can be worth a small fortune and practically nobody discusses them. Here's the single concept that links it all together. Being legally exempt from a property tax bill and actually skipping payment of it are 2 entirely separate things. The law won't reimburse you on its own. Nobody at the county mails you a check. You've got to be aware the document exists and you've got to submit it. That's the whole reason this video exists. My name is Walter Barron. I'm a state bar licensed estate attorney, and for more than 15 years, I've sat across the table from county assessors, probate clerks, and IRS revenue agents representing actual homeowners. And I'll share with you the most heartbreaking pattern I witness year after year. It's not the folks who attempt to cheat the system. It's honest, meticulous homeowners in their 60s and 70s and 80s, paying a property tax bill they never legally owed year after year after year, purely because nobody ever told them which document to submit. That's the priciest kind of mistake there is, because it's invisible. There's no warning. There's no penalty. There's just money quietly draining from your account every single year that never needed to. So, let's repair that right now. 5 documents plus 3 bonus tactics. Stick around to the finish, because the very last document is the one that quietly costs people the most cash, and it's among the simplest of all to claim. Let's begin with the one nearly every homeowner ought to already have, Document number 1 is the Homestead Exemption, and I need you to truly absorb this because this is the document most homeowners presume they already have on record when in fact they do not. Every state in the nation, with only a small number of exceptions, provides some variation of a homestead exemption on your primary home. What it does is shave a portion of your home's assessed value off the records before the county figures out your tax bill. In Florida, that portion is $50,000. In Texas, it's $100,000 on the school part of your bill. In Illinois, $6,000. In Georgia, $2,000. Every state varies, yet every state means real money. Here's the spot where it trips people up. In certain states, the homestead exemption gets applied automatically when you purchase the house. In most states, it doesn't. You've got to submit a one-page form with the county appraisal office, typically before April 30th of the year you want it in effect. Skip that deadline and you cover the full bill that year. File the form one time, and in many states it remains on record for the whole duration you own the house. One sheet of paper, a single time. Hundreds, occasionally thousands of dollars trimmed off your bill every year forever. Now, here's who this benefits, and it's everybody. If you're a lower income homeowner, that $50,000 exemption in Florida or that $100,000 exemption in Texas can drop your bill by a third or more. And if you're a comfortable retiree perched on a paid-off home that doubled in value over the pandemic, the homestead exemption is also the doorway to nearly every other exemption on this list. The county won't permit you to claim the senior exemption, the freeze, the deferral, or the circuit breaker unless your homestead is already on record. So, if you only act on one thing after this video, phone your county appraisal office tomorrow and ask a single question. Is the homestead exemption on record for my property under my name? If the reply is no, ask them which form you need to submit to add it. That's document number 1, and for many of you, it's the gateway to all the rest. That was just the warm-up. The following 4 are larger. Document number 2 is the senior or age 65 exemption, and this one rests right on top of the homestead. Most states that grant a homestead exemption also grant an extra exemption that activates the year you reach 65. And this is the document the county will almost never voluntarily mail you. It's a separate sheet of paper. You've got to request it by name. The figure swings dramatically, and this is where the lower income payoff and the middle class payoff diverge. In Texas, every homeowner 65 or older receives an extra $10,000 off the school part of their assessed value on top of the $100,000 homestead. In Florida, the senior exemption can be a further $50,000 on top of the standard $50,000 homestead, doubling the total erasure. In New York, the senior exemption can slash up to 50% off the assessed value for qualifying seniors. In Illinois, an extra $8,000. And every one of these is a distinct application from the basic homestead. Now, here's the part where comfortable retirees check out, and you shouldn't. Plenty of states' senior exemptions carry an income cap. New York's, for instance, sits around $58,000, Illinois $65,000. If you're over that line, you assume you don't qualify, so you never apply. But more than half the states with a senior exemption have no income test whatsoever. Texas, Florida, Georgia, Tennessee, Mississippi, Alabama, and others. The senior exemption is age-driven only. Income is irrelevant. Your home value is irrelevant. You hit 65, you submit the form, you receive the exemption. So, if you're 65 or older and you reside in your own home anywhere in this nation, your single task after watching this video is to call your county assessor and ask, what is the senior exemption application in this county? What are the eligibility rules? And when is the filing deadline? Grab the form, file it once, quit overpaying. Now, we arrive at the one that genuinely makes a difference. Document number 3 is the Senior Assessment Freeze, and this is the single most valuable document on this entire list. Here's what it accomplishes. When you reach 65 and you submit the freeze application, the county locks in your home's assessed value at whatever it stood at the year you applied. From that moment onward, regardless of how much your neighborhood gentrifies, regardless of how much your home appreciates, regardless of how high property values soar in your zip code, your property tax bill is figured on the frozen value, not the new value. Your home can double. Your tax holds steady. Let me hand you the clearest illustration. In Texas, once you hit 65 and you submit the over 65 tax ceiling application, Your school district property tax is frozen at the dollar amount you paid the year you turned 65, not the assessed value, the actual dollar amount of the bill. Your home value can triple. The bill can't climb. In Illinois, the senior assessment freeze locks in your equalized assessed value provided your household income stays beneath a state set limit. In New Jersey, the senior freeze reimburses you every dollar of property tax increase above the year you first qualified. Different mechanics, identical result. Your tax quits growing. And this is where comfortable middle-class retirees get burned the worst by not knowing the document exists, because the freeze is most valuable in exactly the sort of neighborhood a comfortable retiree occupies. If your home was worth $220,000 when you turned 65 and it's now worth $440,000 and you never submitted the freeze, you're paying tax on every dollar of that appreciation, and you'll keep paying on it for the remainder of your life. The homeowner across the street who submitted the form is paying tax on the 220 figure. Same house, same neighborhood, same year built, two completely separate tax bills. The sole difference is one of them filed one form. There's a single rule on the freeze you have to grasp. In most states, you've got to submit it within a particular window. Typically between January 1st and April 30th of the year you turn 65, or in some states, the year after. Miss that window, and in some states, you forfeit the freeze permanently. That's why this document is the one I'm the loudest about. Phone the county now. Request the senior tax ceiling or senior assessment freeze application by name. Even if you already passed 65 3 years back, in many states you can still file. The exemption moves forward, not backward. So every year you delay is another year of overpayment you'll never recover. That's the document most homeowners never catch wind of. The next one is even quieter. Document number 4 is the circuit breaker, and this one is pointed directly at homeowners on a modest or fixed income. The name stems from the notion that when your property tax bill climbs past a specific percentage of your income, an electrical-style breaker trips, and the state reimburses you the surplus. Most people have never encountered the term in their life. Almost every state has a version of it. Here's how it operates in everyday language. You submit an application with the state, generally as part of your state income tax return, even if you owe no state income tax. You report your household income. You report the property tax you paid that year. If your tax surpasses a percentage of your income, somewhere between 3 and 6% based on the state writes you a check or credits your state taxes for the gap. Massachusetts, Maine, Vermont, New York, Michigan, Minnesota, Missouri, Maryland, Wisconsin, Illinois all have circuit breakers for seniors. The figures span from a few hundred a year to over 1,300, and the application is a state form, not a county form, which is partly why almost no one realizes it exists. The county will never inform you about it because the refund doesn't originate from the county. If you live primarily on Social Security and a small pension, and your property tax bill is devouring any meaningful slice of your monthly income, you almost surely qualify. The income caps in most states aren't low. New York's is just shy of $29,000 for the basic credit, and the enhanced credit activates far higher. Maryland's is nearer to $60,000. So this isn't a poverty program. This is a working middle-income retiree program, and the application is usually a single page tucked into the rear of the state income tax instructions. So, if your state appears on that list and your household income falls below roughly $60,000, search for the phrase Circuit Breaker Property Tax Credit alongside your state's name and submit the form. Some states will reimburse you for prior years. Some will only go forward. Either way, the form is free, the application is one page, and the check is real. And now, document number 5, the one I pledged at the beginning. Document number 5 is the Property Tax Deferral, and this is the document almost nobody discusses because every county and state that offers it guards it like a state secret. Here's what it does. If you're a homeowner over a certain age, generally 62 or 65 depending on the state, and you've resided in your home long enough to satisfy the residency requirement, you can submit an application to postpone your property tax payments. That means you cease paying property tax, not reduce, cease. The state pays the property tax on your behalf, and the unpaid taxes turn into a lien on your home, repaid only when you sell, refinance, or the home passes to your heirs. For a homeowner who is house rich and cash poor, which is the precise profile of millions of seniors in this nation, this is life-altering. You can remain in the home where you raised your kids for the rest of your life without writing a single check to the county. Oregon, California, Washington, Colorado, Texas, Tennessee, Idaho, Illinois, Massachusetts, and several others all offer some version of property tax deferral for seniors. And here's where comfortable middle-class retirees should pay close attention, because this isn't only for low-income homeowners. In several states, the deferral is open regardless of income. The interest rate the state charges on the deferred amount is low. In many instances, 2 to 6% simple interest, and the lien sits behind your mortgage in priority. If the alternative is selling a home you don't wish to leave merely to keep pace with the tax bill, this form is the solution. There's one rule you absolutely must know. If you carry a mortgage, you have to verify with your lender first, because some mortgage agreements treat unpaid property tax as a default trigger. For a paid-off home, the deferral is clean and straightforward. One application typically filed at the county treasurer or state revenue office. Annual renewal tax bill vanishes. That's document number 5. And it's the one that quietly costs people the most money to skip, because every year you continue paying a tax you could have legally postponed is a year you pulled money out of your retirement savings to hand to the county. For some of you, that one form alone is worth more than the other 4 put together. If you hold any assets at all, the next 3 minutes will save you more than the last 20. 3 bonus tactics. The first one is for any homeowner who served in the military. The disabled veteran exemption exists in almost every state, and depending on your service-connected disability rating, it can erase your property tax bill completely. A 100% service-connected rating in Texas, Florida, Virginia, Pennsylvania, and many other states means 0 property tax for life on the home you live in. Even a partial rating, 30%, 50%, 70%, frequently translates to a proportional exemption on top of every other exemption on this list. The form is usually a single page plus a copy of your VA disability letter. If you served, submit this form. If a parent or spouse served, find out whether the exemption can transfer. The second bonus tactic is the surviving spouse carryover. When a senior homeowner passes away, their senior exemption, their freeze, and in many states, their disabled veteran exemption do not automatically transfer to the surviving spouse. They have to be reapplied for, generally within a year of the death, and the surviving spouse usually has to be at least 55 years old, sometimes a bit younger if there are dependent children. If a spouse passes and the survivor doesn't file, the property tax bill can leap overnight, occasionally by thousands of dollars, on the very household that just lost half its income. Most counties will quietly permit that to occur and never raise the matter. The form is short. The deadline is real. Don't let a county pocket your spouse's exemption. The third bonus tactic is the one nobody on this list has anything to do with the county handing you a discount. This one is you challenging your assessment. Every property tax bill is constructed on top of the county's appraised value of your home, and that value is determined by an assessor who has never stepped inside your house. They rely on neighborhood comps. They rely on square footage. They make assumptions, and they're wrong all the time. Every county in this nation has a right to protest process, generally within 30 to 60 days of the appraisal notice. You submit a 1-page protest. You bring 3 comparable sales from your immediate neighborhood that landed lower than your appraised value. You sit before an appraisal review board for 15 minutes, and in a sizable percentage of cases, your appraised value drops, occasionally by tens of thousands of dollars, which translates to hundreds or thousands off your tax bill that year and every year moving forward. The protest doesn't cost $1 to file. It doesn't demand a lawyer. The county won't advertise it. And in most counties, fewer than 5% of homeowners ever protest, even though something near half the protests that do get filed yield a reduction. Challenge your appraisal every single year, especially the year you turn 65. None of this is automatic. Your county will never call. Your mortgage company will never flag it. Your tax preparer will never bring it up. Every single form on this list, every single one, sits on a shelf at the county assessor's office until you stroll in and request it by name. The seniors who land these exemptions aren't luckier, and they aren't wealthier. They're simply the ones who knew the form existed. If you'd like a one-page checklist of every form I covered, plus the state-by-state filing deadlines and the phone script for calling your county assessor, I've placed a free copy at walterbaronlaw.kit.com/propy-kit.com/propy-tax-checklist. The link is in the description. If you know one homeowner over the age of 65 who is still paying a full property tax bill, send them this video. That share might save them $4,800 next year, and a freeze they didn't know was waiting on a form they didn't know existed. Thank you for watching.